everybody. I'm back here with another edition of the 1Mby1M podcast. Today, I'm here with Cloud Apps Capital Partners, Matt Holleran. Matt, welcome to the show.
Thank you.
So let's start by having our audience meet you. So tell us about yourself, a bit of your background, and also about Cloud Apps.
Yeah, well, I think the most interesting market in the world and business problems to work on are business software problems. And I've been in the business software industry for 25 plus years in companies like Clarify, the leader in customer support in the enterprise software world, Data Sweep on the manufacturing floor, and Salesforce.com, where my team started, and I led the App Exchange ISV and platform ecosystem. And I've also been an investor now for over 12 years, 10 in this category. Started my career at Morgan Stanley in the buyout industry as an analyst, and then was at another firm called Emergence Capital Partners for 6 years prior to starting Cloud Apps Capital Partners in 2014. So that's a little bit about our history, both as an operating executive and as an investor. And that's helped me to get to know a lot of entrepreneurs, but also executives and partners and advisors who can help small companies on their way.
And what about Cloud Apps Capital Partners? When did you start, and what's the investment thesis of the firm?
Yeah, so my prior firm and before, I kept running across great entrepreneurs and executives who were mapped onto a really important business problem and had great expertise, but maybe they didn't have product and market yet. Maybe they had early customers. Maybe they had a small team of 5. And I kept having to say to them, the venture market doesn't do that stage of investing anymore. And so as I thought about that, and I said that for the 5th or 6th time, and some companies that are now very large, like, for example, Todd McKinnon, is the president and CEO and founder of Okta, now worth, 15 to 20 billion. I was his first call at my prior firm, but it was, quote, too early. And so as I thought about that, and I said, you know what, that's the stage for the right entrepreneurs mapped to the right problem, where you can give them the right amount of capital to build a great business application, but also assist them along the way. And that's what we really refer to as the classic Series A. And Cloud Apps Capital Partners was founded for us to be the best firm in the world in the cloud business application market at the classic Series A stage.
And elaborate on that for me for a second, because, the early stage market has changed. It is now, quite segmented. Some people are doing pre-seed, some are doing seed, some are doing post-seed, some are doing pre-Series A, small Series A, large traditional Series A. Where does your Series A fit in that continuum?
Well, first, I'm not qualified to speak to the consumer market, but in the cloud business application market, our read of an entrepreneur who's mapped onto an important problem, is building their business around an important executive, a $2 million financing from a headless syndicate of pre-seed and angels is unlikely to give them enough capital or focus or expertise for them to get past the goalposts of the larger firms and what they're looking for in traction in teams. So we don't think that, we call it, the dreaded $2 million headless syndicate is what entrepreneurs really need. So from our perspective, and we've done this now several times in Fund 1 and in our second fund, we've had, multiple companies who were 2 domain experts in a very big problem. They had, no lines of code yet and no customers. And we might have led a $4 million classic Series A1 financing and then a $4 or $6 million A2 to help them to get, past the goalposts of what the larger firms are looking for. So for an example, Propel, now the leader in cloud product lifecycle management, a huge global category, just raised an $18 million financing from Northwest in the fall of this year. And that's a really good example where we first invested in Red, a domain expert in the market globally, before they had any code. So I just want to give you a read for it. We like to work with angel investors. We like to work with some of the leading seed firms in the classic Series A syndicate. But in general, these entrepreneurs generally need really about $5 million in order to really build a good product and get the right kinds of early customers. So that's how we see it in the cloud business application world. But again, I think the seed and the pre-seed market works very well on the consumer side. that's not an area where we focus.
No, that is not what I'm hearing at all. So, I mean, what you're saying is very refreshing that you're willing to do, 4 million, 5 million round on, just pure team and concept and no line of code. But the truth is, most of the micro VCs who are doing B2B SaaS are looking for product market fit, most of them. Some are looking for a certain MRR metric, whether that is 20,000 per month or 40,000 per month, in some case 80,000 per month before they're willing to write that million to 3 million check. So I think your point is actually, I don't think it applies to consumer markets at all. It definitely does not apply to B2B SaaS, because we have talked to, I would say, hundreds of micro VCs at this point who are, most of them are not investing at the concept stage.
Yeah, I would say there's also a difference, which is, like, I think Propel is a great case study for us here, right? This is a $15 billion global TAM category. And Ray Hines, the founder and CEO of Propel, had been the VP of Products and Strategy at Agile Software, which is the people systems of PLM back in the day, and great domain expert and had cloud-specific expertise. And so, in his thinking through, is the PLM market ready, because it's so mission critical to move to the cloud, and they're moving them to the cloud in the right way to deliver them more capabilities. That's the kind of business problem. It's a big problem that you need to build applications for and get customers successful. So you really can't, right, put $100,000 or $500,000 to get that going. It doesn't make a dent in the problem. So I think it's to a point. There are a lot of big categories, a lot of titles that need applications for their teams that need to be served ahead of here. But there are also a lot of companies that are not venture scale companies. And that's a great thing. We don't call them lifestyle businesses. We say those are amazing businesses that people are working hard on, but they're unlikely to be venture scale IPO companies. And for those folks, a seed financing looking into traction where they might return capital or they might get acquired along the way, that may very well work. But the big problem is it doesn't.
Well, okay, I will push back on this a little bit. Your point is well taken that most businesses out there are not venture scale businesses. That is absolutely correct. And we constantly harp on that with our audience because, as I said, we don't expect that million companies out there are going to be fundable. Only a very small percentage of those companies are going to be fundable at a venture scale. But we do have case study after case study of companies who have been doing venture scale businesses and have gone on to raise huge amounts of financing, but have bootstrapped the early stages. And there are very, very good examples of that. From your previous life at Salesforce.com, you must remember Aptus that went to $5 million in revenue before they raised a penny of financing, and that is a venture scale category.
Yeah, so I think, Aptus is a great example of that. And just to give you a view, at the time they were founded, I was leading the Salesforce platform, which they had built their business on. And, I met with Nihar, the founder, co-founder and head of product there, who was a peer of mine at Clarify back in the day, before they chose to start the business. So I know the business and the category quite well, and you're absolutely right. I think they did the right things for them to bootstrap, use customer capital along the way, and they'd also been successful executives and entrepreneurs making that choice the right way. So there are situations where companies can self-fund through that period. I think you've also seen a number of them, particularly internationally, like in Atlassian, for which there's no capital into the business prior to late-stage financing. But I think those are generally an exception, because when you get to a venture scale category, you have to move too, because vacuums don't exist forever in the world. And if you're not going as fast as you appropriately can in a venture category, someone else may, and you may lose the opportunity.
Fair enough. All right. So I'm going to ask you something based on what we just talked about as your background as the head of platforms at Salesforce.com. So one of my observations is that there are Oh, I don't know how many. You probably have a specific number. My assessment is there are probably a couple of hundred companies at this point that are doing upwards of $50 million in annual revenue, SaaS companies. Which of those do you see as either doing that you know that they're doing or are good candidates for doing the platform strategy that made Salesforce.com so successful? Because very often these companies are, leaders with one product, and then they have built the channel to reach those customers and so forth. So one of the easiest, best ways to expand that would be to get all the adjacencies and get products in the adjacencies. Now, it's not easy for SaaS companies to integrate random products that are on a different stack. So can you comment on this whole phenomenon that's going on there? And I'm going to tie this into your investment strategy in a moment.
Yeah, well, I think all cloud companies that are, building and solving an important problem, that are owning an important title in businesses around the world, their fundamental strategy should always be for them to go market and sell and acquire customers right on their own. And in addition to that, there are certain categories of companies that should work with a Salesforce.com App Exchange marketplace, or now the marketplaces that you see at all of the other cloud companies, which the Salesforce.
That's not my question. No, I think you misunderstood my question. The question that I'm asking is, so Salesforce.com did its own platform and the App Exchange around that platform. Right. I'm asking the question that, these companies that have reached a certain amount of critical mass and have a channel and have a customer base and so forth, some of them, in my opinion, should be doing that platform strategy. They should be having their own platforms and building an ecosystem around that platform to address some of the adjacencies to their product line.
Yes, I would say in most cases the answer is correct. If you're saying should they be building on Amazon or Azure, right? Or are you saying their own data centers? I think you're saying some external third-party platform, correct?
I think the data center matters less. I think it's more the APIs and something that will allow entrepreneurs to build on their stack, basically.
No, I understand. Yeah, I think from an API viewpoint, it's a necessity. It's really important for any cloud business application company today. And, for your customers that are using Salesforce.com or using Workday or using NetSuite/Oracle or using other cloud companies, it makes sense to build the right integrations in the right way and to leverage those marketplaces. Choosing to build on a platform is a really important decision. And in some cases, it's absolutely the right answer to build on Salesforce's platform or on other ISV companies that also have a platform like a Google, and in some cases it isn't. And that's something you really want to think carefully about as you're starting these businesses, and also work with people who can help you to make that decision. And fortunately, having started the Salesforce App Exchange and the Salesforce Platform ISV ecosystem, this is something we've been thinking about for a long, long time, and we're able to assist entrepreneurs to make those calls.
So let us say a company in your portfolio has reached a certain level of critical mass, let's say 50 million in revenue, and wants to acquire companies, other SaaS companies that may be able to give them a second or a third product that is adjacent, can leverage the channel, etc. How do you think about integrating such an acquisition or a set of acquisitions?
I think that the topic is timely, right? Because there are a number of cloud companies, right, that are buying late-stage cloud companies to help to round out their portfolios in product, but also they need the expertise in the sales and marketing, right, for that other product area. And we'll come in kind of how do you cross-sell, how do you do that effectively? You're also seeing private equity firms buy cloud companies and combine them, right, with the intent for them to cross-sell and upsell and have a larger footprint. But it's, that is more challenging than people think. But I think, to answer the question, it's, first, the CEO needs to think very carefully about that product extension needs to think very carefully not only about the product fit and the API and the product integration, they also need to make sure that the team that they're acquiring, that you know how to sell to that adjacent title. You know, what does that title care about? So, for example, like Salesforce.com, historically selling to the VP of Sales. They've made multiple acquisitions for the VP of Marketing. Now, how do you sell to a VP of Marketing? What does she care about? What are their key objectives, right? What's the way to get them comfortable? Or in their support cloud, how do you sell to a VP of customer support? It's not just the product. You need to also have the expertise for how to sell and service those entities in order to cross-sell efficiently and effectively. So that's the advice that we provide.
That's actually very interesting and relevant point. But I'll go back to asking you the question on product integration. If there are two different cloud products in two different stacks, how do you integrate?
Yes, I think first is let's use Salesforce.com as an example.
Yeah, that's exactly why I'm asking you these questions.
Yeah, no. I think it's helpful, right? Which is, Salesforce has acquired a number of clouds that support other executives, right? So from their core VP of Sales, they also now have VP of Marketing. They have VP of Customer Service and Support. Those companies, in many cases, brought their own clouds and own applications. But the API that you're framing is what makes the magic of that work, right? And so, how do you can build via APIs on both sides. You can build beautiful integrations into Salesforce.com that are as good or better that they may be able to build themselves internally, which is very cool, which is what happens to make the marketplace and the app exchange and other app exchange and marketplaces like that at other companies work. So it really has to do with the API and the combined end user experience. And then over time, right, you can synthesize, broader cloud transformation and moving applications one onto the other, like Adobe's done with their work with Azure. But the starting point really is with the users and via the APIs and focusing on the users and the app-to-app business process and workflow.
Very good. Very good answer. So now let's tie this into the investment strategies that you are following. What kinds of cloud companies are appealing to you? Of course, you want a venture scale category. That's kind of table stakes. Otherwise, you don't want to do the kind of investing that you're doing. But within that, we're looking at a very mature category, right? Cloud apps is a very mature category. So how are you thinking about where in cloud apps are the big venture scale opportunities today sitting in the, first quarter of 2019?
Well, I think our model is, and in part what helped to inspire the firm, is in 2007, I led an event at my prior firm for going global. And we had executives from Salesforce.com who have been part of the global expansion in Europe and Asia Pac. And we had Dave Goldberg, who's since passed away, who's the CEO of SurveyMonkey, and how SurveyMonkey approached going global. And what became clear at that time is the cloud market was increasingly global and increasingly not only small, medium-sized company, but global enterprise. So the question on what's a venture scale category, when you consider that entrepreneurs can serve the world, right, you now have global scale categories that may not have existed in the client server world. So for us, it's really about saying, who are the titles that are not well served? So if you're the VP of HR at a global enterprise, you're well served by Workday. If you're the VP of sales at a industrial B2B company of medium scale that doesn't want necessarily the most cutting edge technology, it's likely you're well served by Salesforce.com. But how do you think about titles that aren't well served and building out businesses around the right titles that are of global scale? That's pretty interesting. For example, ServiceMax, I had championed that initial class Series A at my prior firm. We're fortunate at our firm, we were investors. That's going after the VP of Field Service. That's a big global category if you can get it right. And that's a good example of the kinds of titles that we think about.
Okay. Interesting way to look at it. And What is your TAM assessment right now? I mean, given you're talking about these underserved titles, you must have done some assessment of how many of those titles are there, because the big titles have been picked up. So you have one option of cutting it on verticals and looking at vertical specific titles in some cases, or clusters of vertical specific titles, manufacturing titles and services titles and so on and so forth, consumer packaged goods titles. What homework have you done to assess what kind of TAMs, which titles have venture scale TAMs that are worth going after?
Well, you are correct in saying that we do have a map for that, and we have an evolving map for that. And there are a lot of titles that are not well served. And there are many titles that are not well served for which it may not make sense to build a business around, because they can't get it.
It may be okay to build a business, but not a venture scale business.
Right. And so, give you a couple that I think are interesting that you might enjoy. So, right now there's a brand new title, right, called Customer Privacy Management. That may be the same as the General Counsel, and the General Counsel is increasingly a business person in addition to a lawyer. So, with a new GDPR legislation and California Privacy Act, we're pleased to have led the Classic Series A financing in a company called DataGrail last year, right? That helps companies to not only manage the compliance, and when customers want information back, they can provide it, but also as a result be proactive about changing the privacy dynamic and relationship between a company and its customers. So that's an example of a title that those people are all over the world. And it's a new title that is pretty exciting for DataGrail to be servicing around the world, but also connected to a title that's existed forever. And serving the General Counsel, we think, is a great idea. So that's, I think, a good example of titles heretofore not well served.
Very good. So let's talk about a few of your portfolio companies, what you have invested in that you feel really good about, is going well. And again, point out when they came to you, what did you see in these companies that really captured your attention? And you gave us one example to begin with. So give us a little bit more color on these companies that you have chosen to invest in.
Yeah, so I'll share some with you. I'll go a little deeper in something that we've talked about, but also I'll tell you, and for your readers, I would encourage them to think about this, or for your community. We encourage entrepreneurs to think carefully about whether or not they should announce funding, as opposed to reflexively announce it. So we made a number of investments that are not public information, because the entrepreneurs think it's super important what they're building, and they're waiting for the right time to let the world know that this great opportunity exists. So I just want to give you a view for what we may talk about, or what you might see on our website is a subset of what we've done. And I would encourage your entrepreneurs to consider this question. But a couple of examples that we talked about are here earlier, I think, would be representative. First, ServiceMax was 4 people, 2 great domain experts in field service management, and had to champion that super hard to get that first investment done at the Classic Series A stage. I then recruited the CEO, Dave Yarnold, who I'd worked with and for at Clarify, the customer support company, years ago, who had been a VP of sales from $4 million to $100 million at SuccessFactors. Dave built an extraordinary business that became a global category leader and was acquired by GE for $1 billion in cash. 2 that we talked about here earlier today. Propel is a large global category, super domain expert, and Ray Hine. They had 2 co-founders when we made the initial investment, and we helped them to bring on board a co-founder. And we've led the syndicate for the A1 and the A2, and I'm pleased to share with you that we think they're building a great business, and recently had Noah West join an $18 million Series B and join the board. And as I mentioned earlier, DataGrail, they had 3 people at the time at which we led the $4 million Classic Series A1 financing last year. And we think they're building a great company, and they're going as fast as they rightfully should.
So all 3 examples have the following characteristics, right? They're great domain experts. They have previous success track record, and you've known them before from past lives. Is that accurate?
No. So I did not know the original ServiceMax team, but I did recruit in someone that I'd known. I did know Ray, who was a partner of mine many years ago when he was at Agile Software. And in the case of DataGrill, I did not know the team. I think they have the really great domain experts, both in customer-facing applications and in product. But I did know some of their early advisors and folks who are high-value angels who participated in the syndicate, and as a result, got to know them quite well.
Okay. So the prior knowledge requirement is not there, but the domain it sounds like domain knowledge is your main driver, is it? Is that correct?
Yes. You have to be able to understand a title that merits a company to be built around. And in order to understand that title, you need to really understand their problem and their language.
Yeah. Cool. Very good. And if you look at your deal flow from the last, let's say, 12 months, the 2018 deal flow, how many deals have you looked at, and what are the nuggets you're seeing that speak somehow to your investment thesis? What are you seeing out there?
Yeah, so we make about 3 or 4 investments per year, and the reason for that is we do a lot of work on the front end, but on the back end we also take action items in recruiting and partnerships and feedback, and so we want to deliver on our value proposition. We receive inbound via our network, which again, I've been in the market for 20-something years, and from starting the Salesforce App Exchange, we think we have a great and unfair network. But we probably see inbound north of 300 to 400 per year that are coming via our network. And then we also have proactive strategies where we're creating opportunities as well. But just for you, that's the scale of what we see. But again, from our perspective, we want to make sure we're doing our work on the front end and we're delivering on our value proposition to the entrepreneurs on the back end. So we make sure we're only doing about 3 or 4 a year.
And what did you see in the 300 to 400 deals that you've seen? What are the nuggets? What are the trends in that portfolio of deals?
I think it's consistent with what we're describing. They're companies who've realized from our positioning and what it is that we work on that they're going after titles to serve. And they come from all over the world, which we think is very, very interesting. And we see a mix of horizontal applications as well as vertical applications, as you mentioned earlier. So it's a pretty healthy gamut, and in a good way, we're genuinely in that set seeing the folks who have recognized they need the classic Series A, both in the capital amount and in the approach.
And talk to me a bit about geography. You said you're seeing a global deal flow. Are you interested in investing globally?
Yeah, from our point of view, our executive network and the cloud business application, large companies for partnerships via their marketplaces or other, they generally live around the Bay Area. But we speak to entrepreneurs. In fact, I have a call tomorrow for a company in London where they've gotten a reasonable start and they know what they want to accomplish, but they know they want to move to the Bay Area. So we're open to that in all respects. It's unlikely we'd make many direct investments in companies in Europe or in Asia, just given the geography and our network scalability. But we certainly look at companies like that all over the world. And not in our portfolio, but Zendesk, great example of that. What Benchmark did there, and I think that's one of those successes.
Yeah, well, Freshdesk, which is a key competitor of Zendesk, was incubated in 1Mby1M, and they're also an Indian company. That's not a Silicon Valley company to begin with.
Agreed.
Okay, great. What are your parting comments to our audience before we close up this call?
I would just say that, end customers all over the world, businesses, whether or not they're e-commerce companies or industrial companies or medical companies or med device companies, companies all over the world are looking for great cloud business applications, small, medium, and large. And as a result, as an entrepreneur, I think there's no better time to consider launching out to start an application for a title that is very, very meaningful. And as a result, think of that global TAM. I think you have to think about how and when you'll be ready to service that global market. I would encourage you to think about doing that at the very, very beginning, because that can, like it was said, open up the world to you and make the difference between it, being a public company or a great company that you own and that you bootstrapped as you framed. But I just wanted to make sure that people know we spend a lot of time talking to end customers, and I started my career as an end customer software, and we can tell you that they're looking for great cloud solutions, so this is a great time.
Fantastic. Well, great speaking with you, Matt. Thank you for sharing your perspective. And audience, thank you for listening today. We will be back again with another edition of the 1Million by 1Million podcast. Meanwhile, do come to the website and look at the free public roundtables. You can come with your projects, and we have working sessions. The mentoring sessions, weekly mentoring sessions are great places for you to bring your projects and seek strategic guidance. And otherwise, we'll see you soon. Bye-bye.